Good morning. Welcome to the weekly top 50 mutual funds analysis. I am Nataraj Upadhyaya. This analysis is for the week ending on April 26, 2024. Let us, for the details of this analysis, you can go to my blog called Nats Fun Corner on Blogger. Let us look at the various fund averages as for the end of the week. You can see the top 50 average based on 1 month return has given an annual return of 60.88%, monthly return of 11.02%, and weekly there has been a recovery by 3.52%. So basically the funds, especially the equity funds, have recovered through the last week. When you look at the summary based on 1 year, it is 79.18% annually. That means there is a scope for further recovery when it comes to the equity funds. And based on 1 year return, monthly return was 9.05. So again, the difference here is the indication of scope of further recovery for equity funds. And the funds that are leading on an annual basis have recovered better through the last 1 week. Looking at the bottom 50, based on 1 month return, annual return is 25.51, monthly return is minus 4.78, and weekly is positive. Bottom 50, look, based on 1 year return, is not good. So there are some funds at the bottom that can be problematic. Entire mutual funds universe, which is a collection of 1,571 funds across various fund types, the annual return is 28.21%. Monthly, it gave 2.92%, and weekly 1.42%. So basically, there is a recovery, and mutual funds are looking attractive even from a random investment perspective. Looking at the equity funds alone, equity funds have done better on an annual basis. However, on a monthly average basis, they are 10.98, bit less than 11.02 across all fund types. This is because some commodity funds might have ruled better. However, the recovery through the last 1 week is very good. Based on 1 year average, top 50 equity funds, annual average is 37.50. So this is because the equity corrections have happened, and there is some churn out with respect to the 1 year performers. However, recovery is in progress. Entire equity fund universe, average annual return still for 43.26%. Last 1 month it gave 4.60%, and last week it recovered very well. So equity funds are still very attractive in India. Debt funds are boring because there is nothing much happening. Only if the interest rates start falling, debt funds may look better than fixed deposits. Still, debt funds have given you average, somewhere in between 7% to 8% annually. There is nothing much to talk about debt funds. Hybrid funds are recommended when there is a correction in the equity market, and however, hybrid funds have performed slightly lower than equity funds in both bullish and bearish time recently. Still, top 50 hybrid funds have given an annual average of 35.82%, monthly 4.50%, and weekly also there has been a recovery. On a 1 year basis, it is comparable for the hybrid funds with the 1 month leaders. Entire hybrid mutual fund universe has given an annual return of 22.83%. This is approximately 216 funds average. So the hybrid funds are also looking up. When it comes to commodity funds, there has been a significant correction through the last week, though there has been a bullish run in the last 1 month. So still the 1 month return is looking very impressive, and the annual returns have come down from 20% level to around 15% level. So that is the summary looking at the entire mutual fund universe. Now let us go to the top 50 funds across all fund types. Here, whatever rows I have marked in green are investment worthy, fresh investment worthy, simply because they have given you return in all time frames from 1 month to 1 year above the average of top 50. And what are those funds? HDFC Defense Fund. It has given 17.42% monthly, the highest for the last 1 month. Quant Commodities Fund, Mirae Asset Nifty Small Cap 250 Momentum Quality 100 ETF. So selective small caps are doing well. Then Mirae Asset Nice FANG Plus ETF FOF. Last week there has been a correction, but monthly it is still in the leaders list. Quant Value Fund, GEM Midcap Fund, SBI PSU Fund, LIC Mutual Fund, Infrastructure Fund. These are all showing above average returns from 1 month to 1 year. So they are marked in green. So one can be reasonably safe to go for fresh investments here. Let's look at the next one, which is going for the annual leaders, which is the next slide. I'm trying to go to the next slide. Before that, let us look at the bottom 50 funds based on 1 month return. You can see that the IT funds, though they have some recovery through the last 1 week, they are still in the bottom 50 with a close to 4% correction through the last 1 month. However, the intensity of correction is fading. So hopefully, in another few weeks, IT funds might hit the might start recovering further. But it's too early to say. Various equity funds with various themes are here in the bottom 50. For example, the top one is Edelweiss US Technology Equity Fund has corrected by 8.33%. HSBC Brazil Fund has corrected by 6.87%. So let's not worry about it. Just it is to see any trend. So when you are using thematic funds, and if they are going through some correction phase, you have to be careful. Sometimes it is better to get out than hoping that they will recover quickly. So let us move to the next one. This is the top 50 funds based on 1 year return. Here again, the ones that are marked have shown above average return from for all timelines from 1 month to 1 year. So the top one is still CPSE ETF. See, it has given you return of 108.29 and monthly return of 9.12, but you didn't see the top 50 in the 1 month because it is still below the top 50 average. That's why you didn't see. So CPSE ETF did well last 1 month and 1 week also. Aditya Birla Sun Life PSU Equity Fund, SBI PSU Fund, Mirae Asset Nice FANG Plus ETF, FOF, again, in spite of last week correction. Motilal Oswal, S&P, BSE, Enhanced Value ETF as well as Index Fund, Invesco India PSC Equity Fund, Quant Infrastructure Fund, Quant Value Fund, and Bandhan Infrastructure Fund. So the PSU funds are coming back to top 50. So they may deserve further investments as you go. Looking at the bottom 50 based on 1 year return, again, these are various thematic funds that didn't work well. One thing I like to highlight is Mirae Asset Hang Seng Tech ETF. Though it has had a recovery of 13.31% through last 1 week, it is still a underperformer from a 1 year basis. So these are the various funds, and you see many foreign equity-based funds here, though they are Indian mutual funds. Then you will see a lot of debt funds also here. Obviously, debt funds being in the bottom 50 is a good sign for the equities. So we could say that last 1 week and it has been good for equities by looking at the bottom 50 here. We'll move on to equity only top 50. Equity only top 50 based on 1 month return. Again, the investment worthiness is shown by HDFC Defense Fund, Quant Commodities Fund, Mirae Asset, Nice Bank Plus, ETF, FOF. Though I would caution for further potential correction through this week. Quant Value Fund, SBI PSU Fund, LIC Mutual Fund, Infrastructure Fund, DSP Tiger Fund. On an annual basis, equity only basis, it has given you return of 11% through last 1 month, 4.78% through last 1 week. So this fund for the second week is being shown in the top 50 based on 1 month return. So moving to the top 50 based on 1 year return, we'll see almost similar funds. Let me highlight the different ones here. Aditya Birla Sun Life PSU Equity Fund, Invesco India PSU Equity Fund. And the rest are same as what we see there. So the equities are very attractive. So it is worth investing on this leader both on a 1 month top 50 and top 1 year top 50. That is the spirit of that slide. Let us move on to hybrid funds. Hybrid funds are the ones typically we would balance the risk between the equity and other asset classes, which could be debt or commodity. However, in India, hybrid funds have consistently underperformed the equity funds. So here we can see Quant Multi-Asset Fund is in the leading with 51.45% annually, and last 1 month it returned 7.82%. Other investment worthy ones are Quant Dynamic Asset Allocation Fund, JM Aggressive Hybrid Fund, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Retirement Fund with the Hybrid Aggressive Plan, Aditya Birla Sun Life Multi-Index Fund of Fund, HSBC Aggressive Hybrid Fund, Quant Absolute Fund, ICICI Prudential Child Care Fund, which is the GIFT Plan, Nippon India Asset Allocator Fund of Fund, Shriram Multi-Asset Allocation Fund. So all these, have given you an average of 35.82 annually and 4.5% monthly, with quite a recovery through last 1 week. Let us move on to hybrid funds based on top 50 ones based on 1 year return. Here the highlighted one are Quant Dynamic Asset Allocation Fund with an annual return of 62.85, JM Aggressive Hybrid Fund, ICICI Prudential Retirement Fund, Hybrid Aggressive Plan, Bank of India Mid and Small Cap Equity and Debt Fund, Quant Multi-Asset Fund, ICICI Prudential Child Care Fund, GIFT Plan, Quant Absolute Fund. So when you look at the leaders, appearing both in 1 month top 50 and 1 year top 50, it is a further reconfirmation that they are investment worthy. Now let us come to commodity funds. You can see that commodity funds have significantly corrected through last 1 week. However, because of the bullish run in the last 1 month, their 1 month return is still looking very good at an average of 8.94 and highest is 10.27. And annually, there are some funds which are showing, equal to 20 or about 20%. However, our investment worthiness is evaluated by looking at above average return in all time frames from 1 month to 1 year. From that basis, UTI Gold ETF FOF, Invesco India Gold ETF FOF, SBI Gold Fund, Quantum Gold Savings Fund, Kotak Gold Fund, Axis Gold Fund, Quantum Gold Fund, HDFC Gold Fund, and LIC Mutual Fund Gold ETF. These funds are looking promising for further investments. Now, the last one is debt funds. There is nothing much to talk about debt funds because they give an average of annual average of 7.61. If you look at 1 month leaders, 7.99% if you look at 1 year leaders. and entire debt funds average across 480 funds, average is around 7%, 6.99. So debt funds could be consideration as a replacement for fixed deposits, especially when the interest rates start falling. So that time hasn't come. Maybe we have to wait at least another 3-4 months for that to happen. So that comes to the end of this bulletin. Thank you for your time. You can contact me if you have any questions. Again, my blog for details is Nat Fern Corner on the Blogger. You can also look at my bulletins as well as the blogs links available on Facebook, Twitter, LinkedIn, and this video will be available in my YouTube also. You can look for my profile called N. Upadhyay. Thank you for your time. Have a great week this week. Thank you.